Welcome to yet another Friday end of week market wrap, and I'm here as usual with Roger Scott. Roger, welcome.
Thank you for having me, James. It's a privilege being here.
Same for me. Roger, let's talk about the week that was. Explosions in the coronavirus infection rate. We're seeing but the market shrugging it off here and there. Tesla selling off 4%, but generally market conditions and asset prices are solid across multiple sectors. What's going on?
Well, it's interesting that you started with the COVID-19. We have a family friend who lives here in Florida who was planning on going to the Bahamas over the weekend and spending some time there. And Bahamas just said nobody from the U.S. Their COVID-19 cases is going up. I'm hearing some really nasty things on the air. A lot of the South American countries are not faring well. Japan is kind of in the middle of things. I'm going to tell you, India is just doing horrifically. So I'm really hoping that this vaccine will come out sooner than later. We've heard some talk about it, but most importantly, let's talk about the market. The market started, we've had better than, even though the earnings were revised lower, we started seeing a trend that was slightly better than expected, but the market did not react that way. Intel, Tesla, several other stocks, a lot of them in what we are seeing right now is some of the stay-at-home premium stocks begin to falter, and we are starting to see a little uptick in basic materials and home builders. And I mentioned this to you a few times. I mentioned this to you beginning of this week. I'm starting to focus. I'm starting to turn. Here's the thing. When you start seeing the NASDAQ momentum levels, when you start seeing the technical levels, and you start seeing the fundamentals all screaming the same thing, you've got to start listening and paying attention. And most importantly, it is not what is being said to me by that, but what I'm seeing from the other sectors. This rallying gold, basic materials, defensive assets are starting to make a move. And we have not seen that since long before COVID-19 hit. All we've been seeing is tech. And there's only so much money you can allocate, even large funds. There's going to be a point where they get lopsided, So that rubber band, imagine a rubber band is stretched out when it's like this. We're talking about that rubber band it just can't go anywhere. And now we have a long-term trend which is still intact, but the short-term trend is in trouble. And I think we're going to see some more selling pressure and more weakness. Things are going to get ugly before they get pretty again.
Right.
And I think we're there right now. Not just because we're seeing, and it is in this case profit taking on the tech. I could say profit taking because we reached new all-time highs. So anyone who got in, it's actually profit taking. But at the same time, I'm not happy with how the whole thing is going to shake out in terms of the overall market and the ripple effects it'll have on the overall markets. And it has to, because look, you're not going to see a sell-off in NASDAQ in the NASDAQ 100 and not seen in the S&P 500. We would be fooling ourselves. 90% of those stocks are in the S&P 500, and they're the biggest. So,
okay. And so what are we to make of the action in the U.S. bond market relative to all this?
I think usually the bond market leads ahead. But right now, the bond market is in a sit and wait. And I'll tell you why. I'm going to say the Fed is large. We have a Fed right now. I'm going to tell you, I would love to play poker with this Fed. They give away everything. They are the worst. I mean, the job of the Fed is to keep us guessing, keep us trying to figure out what their next step is. That's how the Fed, because remember, the Fed is theoretically supposed to be completely separate from the stock market. The stock market and the Fed, they're not supposed to have that relationship that they have right now. They're not supposed to be as a matter of fact, they are to give us the impression that they're not concerned with the stock market. But you and I know we're not seeing any of that. They are looking at the stock market, and they are doing everything humanly possible and imaginable to keeping the stock market up. But there's only so much they could do, and they are already doing just about everything possible. But again, the bond market right now is waiting for the next step. It's waiting to see how the world is going to be impacted by COVID-19. And again, it's taking a defensive posture. But again, with the Fed telling us they're not going to do anything with interest rates till 2022, they're going to keep rates stable. It's creating tail wagging the dog type of a sentiment with the stock market versus the bond market. And when you put COVID-19 in there, the bond market, I think, is going to see a lot more congestion and consolidation. And the only reason the bond market would rally is if the stock market really begins hitting the 200-day moving average. And I think that'll happen, but it may take some time. I think we're going to have, as you and I both talked, the 2 quarters, or the last 4 months, 4.5 months, if you will, we've seen a reactory market. But right now, the stock market is kind of, that momentum reactory period has ended, and the stock market is doing its own thing. But there's nothing to do right now. It's a wait and see, because what's driving the stock market is COVID-19, and we don't know where that stands. Because worlds are opening, not worlds, but countries are opening, countries are closing. We're here, we're there. It's a wait and see. There are no answers. We have a lot of questions, but there's no answers. So the stock market and the bond market are kind of sitting and waiting. Gold can't do that. You got to have money moving into shifting and moving into US dollar, into gold. There's always a shift between US dollar and gold. So that is going to remain on standby, on the fear level in gold. It's beginning to assimilate itself in the price of gold, in my opinion, right now. And I do believe gold has more upside. But here's the thing. The bond market is no longer leading. I think the bond market is following the gold market and the US dollar. There's no way the bond market is following the stock market, but the bond market is following the fundamentals, following gold and the US dollar. And usually it doesn't do that. But right now, it doesn't have a choice. The Fed has backed it into a corner, James.
Sure. Well, that was sort of leading to my next question, Roger, is to what extent has the Fed painted themselves into a corner, in that now we've got this reality where borrowers are rewarded with low rates, savers are punished with low rates. There's really no point in buying USD as a defensive yielding product, because there's no yield. And so inadvertently, they have created this scenario where gold is the superior safe haven asset, and the price is reflecting that. Because at the very least, there's asset capital appreciation in the gold market.
And in effect, as you and I are both kind of slowly kind of holding our hands and leading the blind and going to this air, they are doing the opposite of what President Trump wants, which is money coming into the US dollar, but instead it's shifting into the gold market, which, as you and I both know, is an international market, and it doesn't have the impact that they intended. It doesn't, because I can promise you the US wants money coming into the US dollar, not the gold market.
Sure.
Probably.
Sure. And
so,
to what extent do you consider the rampant stimulus that has characterized the Fed response to the coronavirus, to what extent does that look like hyperinflation to you of the US dollar?
Like a very, very strong chance of it happening and continuing for some time to come. Very much so. Very, very much so.
Does it then follow potentially that the hyperinflation of the monetary unit always terminates in price inflation, runaway price inflation, which sidelines consumers to a large extent, and further undermines the general economy. So is that what the whole shebang is telling us right now?
Yeah, yes and no. It's telling us that, but look, let's be honest. We've been there before. I mean, in terms of you and I could talk. We could talk about the amount of deficit the country's had. It's kind of, it's at this point, it's kind of like you see a bunch of garbage sitting somewhere, and you kind of say to yourself, well, what's another 2 loads of garbage on it? What's it going to do, right? It already smells. It already looks bad. The neighborhood's already destroyed. That's kind of the attitude. It's being swept under the rug. It's there, and it's not going anywhere. And no, this administration, to say they don't even have an answer for it would not even qualify. I would say they're not even qualified to tackle it.
Sure.
I know this because my ex-hedge fund partner is the senior financial economist to President Trump. So I know that's not even on the table right now. That's not even a conversation that they're going to have.
Huh.
So we're not even going there.
Yeah.
Yes, it's going to probably, in my opinion, if you were to look at the level of overall stress on the foundation of our economy, I would say it's probably going to be 1.7 to 1.8 times more than what we had under the Obama administration. But let's be fair. We didn't ask for COVID-19. There's a lot of things that are completely outside of the. Most of the cause is not as a direct result of the administration. Circumstances. But nonetheless, we have to deal with those circumstances. So, but honestly, that's a long-term trend. And I don't even want to go there because we've been ignoring it. The market's been ignoring it. We haven't even, it's bad. It's bad, Jane. I mean, it's bad. But everyone's ignoring it. You and I paying attention to it, what is it going to do? Ultimately, it's a conversation that we want to have that will probably impact us or come to bite us in the butt probably 20 years from now.
Right.
But it's going to happen. But
and by that time, you and I will be doddering fools sitting in the pool side with our little drinks. Well, but in terms of the future, let's focus on then what we can control, since there's so much out of our control. And certainly the attention you drew to the housing and related subsectors related to housing have demonstrated resilience, and in fact are looking like the place to go more and more.
Yeah, I'm telling you right now, I'm going to give you some stocks. And I like this. I like what I'm seeing right now. As a matter of fact, when we started this broadcast, the home sales report was about to come out. The new home sales, the existing home sales came out 20% better than expected. Okay, well, the consensus on new home sales was 700,000, came out 776,000. And that came out literally while we were talking. It just came out. So again, it just confirms even further what we're saying. This is a very, very hot sector. So I'm looking at, and again, when you see things like this, you don't have to try to outguess the market. You really don't. You can go for the obvious things like Meritage Home Sales. They're the 8th largest public home builder in the country. They're going to profit from this. Ticker symbol MTH. D.R. Horton. Everybody knows D.R. Horton. You drive around the country, you see their signs everywhere. They own Emerald Homes, Freedom Homes, and they provide mortgage services as well. And the best part, all residential. Again, you don't have to be an Einstein. You don't have to look for a diamond in the rough. Go for the obvious ones. But I've also got some other ones for you. Because you know what? If people are buying homes, if people are refinancing their homes, if people are activity with home sales is going on, you right now are dealing with your farm. You're doing repair. I could see that there's stuff going on in the back there, or you know, that you're
Yeah.
doing. We've been talking for weeks or months on this. You've been doing construction. So, for example, you as a homeowner may want to add a new deck to your farm. A lot of people like to add deck when they buy new homes because you know what they do, James, and you know this as well as I do. Interest rates were 4%. Now they're 3%. They go to their home lender and they say, hey, my mortgage is $100,000, but I don't care about the money. I care about the payment. Just get me my same payment. Oh, well, you can get, Johnny can get 25,000 extra and still have the same payment. What are they going to do with that 25,000? Well, some are going to go to Las Vegas, but not right now. COVID-19. They're going to put their money in the house. They're going to build a new deck. They're going to repaint their house. So it's like the shovel and the gold. The shovels make the shovel sellers make money too. So in this case, deck specialists, the company's called Trex, Trex. They make decks for homes. They're doing really well. How about insulation? People do additions to with that 25 extra thousand they're going to get. They're going to install this. They're going to installate. They're going to add a addition, a bathroom, a guest room. Guess what? Insulation, ticker symbol BLD. So not just home builders, companies that benefit from that home building thing. And here's the other thing. Usually you have the real estate market moving up. Not so much now. Now, usually you have money coming into commercial and residential. Now you have commercial lenders, commercial bankers moving into the residential game. And you can buy a lot of residential real estate with commercial money. So instead of buying office space, you have big companies now, REITs, moving into apartment buildings,
Right.
subdivision. So all of this is growing. I was talking to Jeff Zinaneri the other day.
Mm-hmm.
He's telling me in South Florida, things are going crazy. They're having bidding wars right now.
Yeah.
So again, yeah, new home sales, they were expecting 700,000. They got 776,000. Existing home sales early Wednesday, they were, whatever the number was, it was 20% better than expected. Everything I'm looking at is pointing to, and that's why basic materials are going up, because Sherwin-Williams paint, SHW, making all-time highs. People paint homes when they buy. You might have bought some Sherwin-Williams paint when you were painting your farm. I don't know, but you get the point.
Yeah. Yes. Well, in fact, there are some building materials that are impossible to source in any sort of quantity at prices that you would typically budget for them. Cedar decking is an excellent example of that. To try to get high quality clear cedar now, you're paying a premium up to about 30% higher than what is normal, because, and it's very interesting, it's sort of a very emblematic feature of how the coronavirus affects our economy, is all the plants where lumber is pressure treated. A lot of them were shut down as a result of the coronavirus. And so suddenly there was a shortage of pressure treated lumber. Well, pressure treated lumber is the preferred material for not just decks, but also for any framing in houses where moisture is an issue. So suddenly there's a shortage of pressure treated. What happens? The price goes up, and large building suppliers panic, and they buy everything that they can get their hands on and start hoarding it. So suddenly there is no pressure treated wood. What's the alternative? Cedar. Well, people don't like to pay for cedar to use for, framing, but in the absence of an alternative, cedar was the only game in town. So now what's happened? The price of cedar is shot up, and what happens? Suppliers buy up everything there is, and now there's no cedar. So it's like, I go to my local building center and I say, I want, so many feet of 1x6 cedar board. He's like, well, I can get you a quote on that. I'll come back to you next week. Whereas before it was back your truck up over here. The price is the same. Those days are gone. So
bingo.
It's really distorted my sort of evolution in that, so I bought a house that was built in 1910. Of course, our first response is to add deck to increase the floor space. We're building a 4-season wraparound porch, 15 feet deep. And it's like, no, we're not. No, we're not building that deck this year because there's no wood. And if we do want to build it, we can, if we're willing to pay 3 times the amount in some cases for the materials. So, you know, the only rational thing to do is to defer the building of that. And it drives our architects and other trades crazy. They're like, what do you mean you're not building the deck and you want us to continue with everything
Permits
else?
and it's a pain in the butt. Yeah.
Exactly.
It's an engineering pain in the butt. Yeah.
So I can understand why, I mean, the compelling logic as to why building stocks and basic material stocks are going higher is woefully apparent to me.
Yeah. Yeah. So before I know we're running out of time, but before we do, I wanted to give you something on a completely off topic. I know that you talk to a lot of, you're always looking for new trends and new industries and so forth. This is a local medical marijuana stock in Florida. It trades over the counter. It's called True Leaf.
I knew you were going to say that. I was thinking in my head, he's about to say True Leaf. I actually know the CEO quite well. We've interviewed her multiple times in my studio. So yeah, tell me the compelling features from your perspective, because it's interesting. I stopped covering the cannabis sector quite a bit as the sector collapsed in value. It warms my heart to no extent to hear that you're telling me that True Leaf is a buy, because that's great. I'm glad to see the game is back on for them.
Well, the stock is right now making all-time highs. It just broke out of a multi-year high. It went up to about as high as 14, 15 about 2 years ago, but then it started dropping and went as low as 6, and now it's at 16 again.
Yeah, it was a victim of a short attack.
Yes. They are literally, I'm not kidding, James, they're literally opening up a location every other week. They have, I don't know if you're aware, but like 2 years ago, they had about 10, 15 locations. They're now at number 57.
Yeah. Well, it's interesting. If you were to download the 3 cannabis top picks from our free service, 2 years ago, the top pick was True Leaf. So I felt bad about that, because I thought, what an unfortunate choice, as it goes down to $6. But I didn't change it, because the fundamentals of that company have always been very strong. You know, there was the difficulty in the management, and it's like a lot of companies, is that there's this sort of habit of management to open locations in buildings that somebody within the circle already owns. And so there's a little bit of question surrounding the level of self-dealing at the upper levels. And also the CEO's husband was part of an FBI probe, which only lent fuel to the short attacks fire. And that was why they were so successful in decimating the share price 2 years ago. But as I've always said, Kim is going to overcome all that, because she's very focused on what she's doing. And, you know, the self-dealing aspect aside, if you look at any public company, that's just the way it is. And so you focus on that, you know, you're going to miss the rising tide if you focus on the bobbing cork. And certainly that's what probably a lot of people have done, maybe even myself to some extent. So I'm very glad to hear about True Leaf.
They have a complete privity in their products. They do everything themselves. They've also got bad press, and they actually sued the company recently. And somebody was really out to get them, and it was very unfortunate. But the bottom line is, they are growing. They got into concentrates. They had 2 years ago, they had about 10 products. They now have about 80. The company is doing everything right. For the feedback I've been getting from local people, they have delivery services. They're doing everything right. And from what I understand, their quality is about 3 times better than their competitors. So they get it. That's the best way I can describe it to you. They get it. You know, right. I come from California, and in California, marijuana has been legal for many years. And a lot of the companies here are trying to mimic the model that California took before this tax thing, because California was really something else before all the regulatory stuff came in a few years ago. Happened right around the time that I was moving out of there. But this True Leaf, I'm going to tell you, they are they are a stock to watch. They were my number one stock pick about a year and a half ago for the medical cannabis industry. I had no idea that you were also interested in them, but I'm going to tell you, they are doing something right, and I'm very, very bullish on the company long term.
Excellent. Well, that makes two of us. No wonder the stock price went up. We're both big fans of it. All right, Roger. Well, that's scintillating and great conversation as usual. I always enjoy our Fridays, and I look forward to talking to you on the round table on Monday. Have a fantastic weekend.
Thank you for having me, James, and have a great weekend, everyone. Bye.
Bye.